Hi friends, Simit here from InformedTrades.com. Today is July 4th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on the markets. All as a part of helping traders learn. You can learn from my successes, learn from my mistakes, see my thought process. Of course, if a lot of the terminology I'm using or any of the terminology I'm using is unfamiliar to you, check out InformedTrades.com. We have a huge archive of video lessons structured to help you get from complete beginner to learning strategies, not only on the method of trading that I employ, price action swing trading, the Forex market, but many other styles of trading, many other markets. Check it out. Share your knowledge, ask questions, set up a practice account, share your trades. We can all learn together. Let's take a look at the charts. Okay. Right now on the screen is okay. Well, let's start. Let's go to gold first. That's where I like to start. So very interesting. We're at the top of this rectangle, right? And depending on where you draw the rectangle, we actually broke out here July 2nd. But now we're back in it, definitely. So breaking out of the rectangle, we had a reverse candlestick here. That seems to have brought some bearish energy out, some supply out. However, yesterday's candle, really interesting. We have a long wick forming off the 200 exponential moving average. I would interpret this as bulls also putting up a fight. So it seems like we're going to have a little bit of a battle right here, possibly between 13.12 and 13.30. So a $20 range, basically, pretty tight there. Let's see what happens there. So I'm looking at the price of gold relative to US dollars. 13.12, 13.10 to 13.30, right around there, $20 range. Let's see who's going to win that battle, bulls or bears. That's about it. Of course, long term, as I mentioned, I'm very bullish on gold. I expect it to reach new all-time highs. So I'm accumulating. I recently bought some more. I do so from a longer term perspective. I'm willing to hold this position for years, and I expect to hold it for years. We'll see. So that's gold. Let's go to Bitcoin. Need to remember to switch in and out of logarithmic world. I want to be in logarithmic mode, looking at logarithmic charts when I'm viewing Bitcoin because of how volatile it is. The charts I'm using now are from TradingView.com. It's free. I really love these charts. It's helped me out a lot in terms of saving time and giving me all the tools I need. Bitcoin. Okay, so we had this breakout here, and that was where I sort of bought right here. The uptrend has been validated. We had this swing low to swing high, 50% pullback, defended, 57 moving average defended. So that's pretty good. And we did have an AB equals CD line here. Let me draw that. I forget actually what where exactly that took us. But if we take A to B, C, now it's a 55.8% pullback, and we go to D. So 55. Yeah, that puts us at 748. And if A to B took May 7, took about a month, C to D is also, so mid-July, so next week, okay. It could happen with how volatile Bitcoin is. But really what we're looking at is right around there, so 750 next week. That's sort of what the ABCD pattern suggests. Are we going to climb $120 in a week? It could happen with Bitcoin. It's definitely happened before. I don't know. That seems a little bullish to me, a little high expectation. But that is what the pattern is, what the AB equals CD pattern is suggesting. Either way, I do think we're in an uptrend, and I bought, sort of viewing this as a lottery ticket, where I bought at 550. And I may add this position if a good opportunity comes up, but mainly I'm doing this as a lottery ticket, a small position, and if it goes much higher, then that's great. If I lose it all, well, that's not desired outcome, but something I'm willing to tolerate, willing to accept. And I will be holding on to this position for a long time, or looking for a big gain, a disproportionately large gain, really over 10 to 1 type of gain on this. Okay, so that's Bitcoin. Now, two orders that I put on today in my active Forex trading. So we had those comments from Glenn Stevens of the Reserve Bank of Australia, and basically RBA saying they want a weaker Australian dollar, We've seen central banks make these comments for a long time now, since 2008. They really talk down their currencies. There's been competitive devaluations. And if you look at the charts of almost any currency pair, these comments, they have a very clear short-term impact. But in the grand scale, if you're looking at the daily chart, it's not even really discernible. And I think what happened here, so we had those comments, it quickly sent the Australian dollar down, or in the context of pairs where Aussie is the counter currency, the second currency listed, it sent it up. So we ran right into resistance here. This is it's a resistance level established in mid-May. We had a little bit of a range forming here. You could also argue it's pretty close to the resistance that was established in October of 2013. So the market has some memory here. Also, 50% retracement from this swing high to this swing low, and a 50-cent moving average. So these are all the signs I like to see. A little bit of a long wick candle here. It's easier if we see it on the 4-hour chart. Mess this up here. And you can see a little more. This is resistance here, and this is where I entered. You can see it here too, May 30th. So short at 45.97. My stop is at 46.84. My target profit is, well, we'll need to go to the daily chart to see that, much lower, 41.22. So this is, and that goes back to the support established here in October of 2013. So that's a pretty nice reward risk. It's like over 6-to-1. Definitely felt good about that. And I saw the signs of the Australian dollar strength, or time to go long Aussie, on numerous pairs. As we're going to see, I also saw it on Aussie dollar. I also saw it on Aussie Swiss, but that's basically the same as Euro Aussie. So on Aussie Swiss, not Aussie Swiss, excuse me, Aussie US. Well, I did see it on Aussie Swiss, but now what we're looking at is Aussie dollar, and this is where I decided to put the trade on. This is the same exact trade that I actually put on right here on June 16th. Market crash, and then RBA had this, their rate announcement was they weren't going to change rates. Market responded bullishly to that, and it pretty quickly hit my target profit. This is a very easy trade. Very little time spent floating loss, and it very quickly hit my profit. So that's kind of like the, it's the most fun trade when something like that happens. Very easy. This time, price is back at that same level. So what I did was basically put on the same exact trade again. Long at 93.30. My stop is at 93.02. So a fairly tight stop of 28 pips. My target profit is 94.28. You know, this swing low to this swing high, 50% Fibonacci retracement. It's a support level reestablished on June 17th, and that's sort of it. The 50-cent moving average is right there as well. Also, today's candle. Now, today is a holiday in the U.S., so you know you have to discount today's price action a little bit, but it is a tight candle after a big down day. So to me, that suggests you know, potential consolidation, potential exhaustion of the bear trend, and we're going back up. Also, something to mention, you know, and I am focused in these trades. I am focused entirely on the technicals. You know, I'm not really considering fundamentals unless it's for my longer-term positions. But the Reserve Bank of Australia has one of the highest interest rates. You know, Australia and New Zealand still have higher interest rates. ECB now, you know, is negative for banks holding deposits there. So that shows you the direction they're headed in. So there's still a carry trade opportunity here. I still think the basic principles of the carry trade play out in the long run. I think it's one of the safest. You know, if you buy it when it's at the right time, it's one of the safest strategies long term. So that's another reason why I'm interested in being bullish on the Australian dollar at this time. And that's about it for my trading for today. It is July 4th in the United States, so definitely something to bear in mind. That is a holiday in the U.S. U.S. markets will be closed. As a result, I would expect global markets to be a bit thinner today. Best of luck in your trading. Any questions you have, anything you want to add, join us at InformedTrades.com, and we'll see you next week. Take care.